What makes the Swedish structured product market unique, or what are its main characteristics?
Sweden, as a country, we've been known to be early adopters of a variety of things.
Mm-hmm.
We know a lot of tech companies, fashion companies, they try out their new products in Sweden because people are open to try new things. And I think that's very true for the structured products industry as well. We were quite early with starting capital protection. I mean, was introduced with the big banks early 90s.
Yeah.
Very quickly when capital protection became difficult to do, we took on auto-callables, worst of structures, tranched CLNs. We've tried everything. So I think that's one unique aspect.
Mm-hmm.
Other than that, I think we quite early on we had a number of specialized firms doing only structured products. Garantum was one of the early ones. Now we have broadened our offerings, so we're now basically doing everything. But we had a number of these specialized vendors, and that kept the industry going through the tough times. When a lot of people thought it was, perhaps too difficult, or they found other opportunities and ventured into those. We had this core, if you like, of specialist boutiques that just kept everything going. I mean, they didn't have that in Norway, and in Norway, the industry was obliterated. Now we're rebuilding it again, so it's come back, but it took a number of years to reintroduce the product.
Yeah, but I think it's important to highlight, right? The Norwegian market was kind of different, especially before '08 they were selling these structured products connected to loans. It's
was
a way
very different
to leverage, right? It was completely different from the Swedish market, which is an investment product.
Basically they took the capital protected product and turned it into a warrant.
Correct.
Through borrowing and leverage.
Do you see? Mark, you were saying how you have a lot of capital protection, and then at the moment now yield enhancement, yield focused products. Do you see a shift in mentality between those two, or has there been a shift in mentality in the past between those two kind of structures? In this
there have been shifts, and I think now that the shift is away from yield enhancement, and we can talk in more detail about the reasons for that. I mean, the obvious explanation is that we have rates again, and capital protection actually looks good, but we can move into that immediately. Now I think we have overused the worst of structures in Sweden. It worked extremely well for a long period of time from 2008 to 2021. But post 2021, we have seen the big companies on the Stockholm Stock Exchange dispersing widely. I mean, we have never seen anything like it. So obviously those worst of structures have been hit by that. It's been death by dispersion, basically. Now there's still, they can still recover. I mean, both advisors, wealth managers, and clients alike have become much more hesitant because we've now seen in a market environment like this, we looked at this, and since 2021, if you look at the Stockholm All Share, about 70% of stocks are down. More than 40% are down more than 50%. It's a fairly it's an extreme environment, and obviously that's not where a worst of structure is going to perform.